Kenya and Zimbabwe aim to revolutionize trade, but are they doing enough? The Kenyan National Chamber of Commerce and Industry, KNCCI, in partnership with the Zimbabwe National Chamber of Commerce, ZNCC, recently orchestrated the Kenya-Zimbabwe Investment and Trade Mission in Nairobi. Themed Unlocking Business Potential Through Policy, Partnerships, and Productivity, the event aimed to uncover new avenues for collaboration between the two nations. But here's where it gets controversial. Despite decades of diplomatic and economic ties, bilateral trade remains strikingly low. This high-profile gathering brought together government officials, business executives, and investors from both countries to explore tangible ways to boost trade, attract investment, and strengthen industrial cooperation. KNCCI National Director Joseph Mutavai, representing Chamber President Dr. Eric Ruto, highlighted the Chamber's dedication to fostering private sector-led partnerships with measurable outcomes, particularly in agro-processing, manufacturing, and technology transfer. Mutavai pointed to a concerning reality. Between 2022 and 2024, trade between Kenya and Zimbabwe averaged only $39 million per year, equating to just 0.25% of their global trade volumes. Kenya exported $22.1 million in goods, mainly value-added products, while importing $16.9 million, mostly raw tobacco and sugar. The imbalance is stark. Kenya's exports are diversified and refined, whereas Zimbabwe continues to rely heavily on raw commodities. Africa cannot industrialize by simply trading raw materials among ourselves. Value addition must be our priority, Mutavai stressed. He urged both nations to leverage the trade mission as a springboard for long-term industrial partnerships that would bring stability, predictability, and sustainable growth to their economic relationship. During the opening session, Advocate Christopher Mugaga, CEO of ZNCC, praised the enduring relationship between the two countries and called for stronger collaboration to unlock Africa's combined economic potential through industrial and trade linkages. The Deputy President of ZNCC also emphasized that this mission came at a crucial time, as both economies look to diversify exports, enhance value addition, and capitalize on opportunities offered by the African Continental Free Trade Area, AfCFTA. The event's second session focused on pinpointing specific investment and trade opportunities. Presentations from the Ministry of Foreign Affairs and Trade, Kenya Investment Authority, KenInvest, and Zimtrade outlined promising sectors such as agriculture, manufacturing, infrastructure, ICT, and tourism. Speakers from both KNCCI and ZNCC repeatedly stressed the need to move beyond raw material exports toward value-added goods. For Zimbabwe, this means climbing the value chain by leveraging Kenya's expertise in agro-processing. For Kenya, it involves tapping into Zimbabwe's mineral and industrial resources to bolster manufacturing and infrastructure development, explained Fatma Bashir, head of the Trade Department at KNCCI. In his closing remarks, KNCCI AG CEO KK Mutai called for a fundamental shift in approach, urging both countries to focus on value addition, industrial integration, and technology adoption. He highlighted that the AfCFTA provides a transformative framework to deepen this partnership by removing tariff barriers, harmonizing standards, and creating integrated regional value chains. The afternoon was devoted to sector-specific B2B matchmaking sessions, jointly facilitated by KNCCI and ZNCC. Here, participants explored concrete collaboration opportunities in agro-processing, industrial manufacturing, logistics, and technology transfer. Ultimately, the Kenya-Zimbabwe Investment and Trade Mission reaffirmed the shared vision of both nations to leverage policy, partnerships, and productivity as engines of industrial transformation. KNCCI and ZNCC leaders agreed on the importance of institutionalizing business exchanges, promoting joint ventures, and maintaining regular trade missions under the AfCFTA framework to sustain momentum. But the big question remains, will these talks and plans translate into meaningful industrial growth, or will the status quo of low-value trade continue? Share your thoughts. Should Africa prioritize value addition over raw material exports? Or is there a smarter path forward?